Hi, and welcome to today's Technically Speaking Tuesday video update. Today's article on Technically Speaking, of course, is looking at one of the indicators that we use a lot in really kind of measuring what we determine as being overbought or oversold conditions within the market. Now, what does that mean? A lot of people say, well, what does overbought, oversold mean? Well, in any market movement, as prices are either rising or falling, there's a point to where, well, buyers either become exhausted or sellers become exhausted, and all the selling that's going to be done has been done, and that's when we reach an oversold condition. An overbought condition is when most buyers have bought at current prices and they're not really willing to pay a whole lot more given the current market environment. That's what we determine as overbought. Now, these conditions exist on a temporary basis. They don't last for long, and all they do is kind of allow us to understand at what point are we making a transaction within portfolios. Are we making a transaction in terms of buying or selling a position that is going to provide the best risk reward and return on making that investment? It's never a question about whether we should invest. It's always a question about the timing of making the investment. Valuations are a great way, fundamentals are a great way to really pick stocks or to make investments. But timing of those investments and when I put that capital to work is really driven by some of this technical analysis that we talk about from time to time. And look, I understand it gets confusing, technical analysis, mumbo jumbo, voodoo, I got it. But over the years, we've used this very successfully in helping manage risk in portfolios. So I've written a couple of articles this year so far about different technical indicators that we utilize. Those are on the website at realinvestmentadvice.com. Today's article really focuses on Williams percent R, which is technically a oscillator of overbought, oversold conditions within the markets as they exist on a current time frame. Now, as always, when trading a portfolio, it's important to match whatever technical indicator you're using to your trading and investment style. If you're a day trader, you want to use very, very short time frames. For us, as we manage portfolios for retirement accounts and individuals looking at a longer term time frame, we prefer really weekly, monthly, and quarterly data points to determine really overbought, oversold conditions and trends of the markets on a longer term basis. Matching duration of your indicators to your portfolio is extremely important into actually being successful in using technical analysis. Okay, having said that, let's look at the markets where we are today and look at what the Williams percent R is particularly telling us right now. Now, in this past weekend's newsletter, I noted that the market would likely pull back to about 2,800 and find some initial support there, likely on Monday. And the determination for that in this weekend's newsletter was simply that the market had gotten back to very overbought conditions as represented by the Williams percent R. Every time that we've been up at these levels above 80, we have typically seen weakness come in the markets not too long after reaching those levels. And that really goes all the way back to January, when we noted at the end of January, we were talking about the relative strength index, and we said that where these levels are right now, it's very likely we're going to see a 5 to 10% correction. That correction happened actually just the following month. Since then, we've been in a sideways trading pattern, and this recent rally from the lows have gotten us back to this overbought condition once again. Now, does that mean that we're about to have a major crash like we had back in early January, February? No, of course not. But it does suggest that there's potential weakness here in the markets near term, and maybe not the best time to be allocating capital to markets right now. Wait for this overbought condition to be worked off a bit, and then you'll have a better risk-reward opportunity on a short-term basis for investing capital into the markets. But if I'm looking to invest capital longer term as well, I want to use a longer term indicator. We can take the same look and we can actually change this dynamic from a daily chart to a weekly chart, and we get a little bit different picture now from the Williams percent R. This is a longer term look at the markets and this longer term trend in the markets that we've been looking at for really since 2009. But in particular, over the last 4 or 5 years, the markets had this very, very nice bull rally. But even with that, every time we get to these very overbought conditions, as we're currently seeing once again, it suggests that a lot of the upside reward relative to the risk of investing has likely already been built into the markets. So what we're looking for here potentially is if this market cannot break out to new highs and move higher from here, there is a risk that we're going to have a correctional process in here that will probably continue this type of sideways pattern through the rest of this year. We're evaluating this very closely, but looking at these overbought conditions on a longer term basis does lead to some concern about the potential risk in the markets right now, and suggests that maybe having a little bit of extra cash in portfolios, maintaining a little bit more cautious stance temporarily until we kind of get through this turmoil, particularly this summer, concerns over trade wars, tariffs, all these other issues, may provide a little bit better positioning for a movement later this year, particularly if we can work off some of this overbought condition. So read the article. I hope it helps you understand a little bit more about how we use technical analysis within our portfolios. And if you have any questions, be sure and send us an email. Simply go by the realinvestment.com website, realinvestmentadvice.com, and send us a question. Always happy to help you out any way we can. I'm your host, Lance Roberts. Thanks for watching.